You trade gold, or even just watch the market. Listen carefully, because what's happening right now could decide the next major move in XAUUSD. We are at a point where smart money is positioning quietly. Volatility is building under the surface, and most retail traders don't even realize a breakout setup is forming. In today's complete daily gold analysis, I'm going to walk you through exactly what the market is telling us, where price is most likely heading next, and the key levels that serious traders are watching right now. So make sure you stay with me until the end, because the final insight could completely change how you look at gold trading today. And before we dive deeper, if you want daily market clarity, clean analysis, and high-probability trading insights, make sure you like this video and subscribe to Forex Trading Rocket. Signal that small action helps you stay updated every single day, and make sure you never miss an important gold move again. Alright, let's start by understanding the bigger picture, because gold never moves randomly. Every candle you see on the chart reflects fear, confidence, economic pressure, and global expectations. Right now, the gold market is being driven by three powerful forces: US dollar strength, interest rate expectations, and global uncertainty. When these three align, gold makes aggressive moves. When they conflict, price consolidates and traps traders. Over the past sessions, we've seen gold reacting very sensitively to economic data and central bank expectations. Traders are constantly trying to predict whether interest rates will stay higher for longer or if rate cuts are coming sooner than expected. And this matters because gold does not pay interest. When rates are high, investors prefer yields-generating assets. When rates are expected to fall, gold becomes more attractive as a store of value. That shift in expectations alone can move gold hundreds of pips. At the same time, the US dollar continues to play a major role. When the dollar strengthens, gold usually faces pressure because gold is priced in dollars globally. A stronger dollar makes gold more expensive for international buyers, reducing demand. But when the dollar weakens, gold often rallies quickly because it becomes more affordable worldwide. Recently, we've seen moments of dollar strength, but also hesitation. And that hesitation is exactly why gold is not collapsing. Instead, it's holding structure. Now let's talk about market behavior. One of the most important observations from recent price action is that gold is respecting key technical zones with precision, D. This tells us institutions are active. When price repeatedly reacts at the same support or resistance area, that's not random. That's liquidity being defended. Buyers have been stepping in at major support levels, preventing deeper sell-offs. That suggests accumulation, meaning large players may be building long positions gradually. At the same time, every rally has faced resistance near upper zones, where sellers take profit or open short-term trades. This creates a tightening range, and tightening ranges almost always lead to expansion. In simple terms, compression leads to explosion. If you zoom out and observe the structure, gold is forming a controlled consolidation rather than a reversal trend. That's very important. A consolidation after upward pressure often signals continuation, not weakness. Think of it like the market catching its breath before the next move. Momentum indicators also support this idea. We are not seeing extreme bearish pressure. Instead, we see slowing momentum, neutral positioning, and balance between buyers and sellers. This type of environment is usually temporary. Markets don't stay balanced for long. Eventually, one side wins. And when that happens, price moves fast. Now here's something many traders miss: volatility cycles. Gold moves in phases. First, quiet accumulation, then expansion, then emotional trading, then correction. Right now, we appear to be transitioning from quiet accumulation toward expansion. That means traders should be alert, not relaxed. Let's talk about possible scenarios, because professional trading is always about preparation, not prediction. If gold holds above its immediate support zones and buyers continue defending dips, we could see bullish momentum build gradually, followed by an impulsive breakout. That breakout would likely attract momentum traders, pushing price higher quickly. However, if support breaks with strong volume and price closes decisively below defended levels, that changes the short-term structure. In that case, we could see a deeper correction as trapped buyers exit positions and sellers gain confidence. But right now, based on price behavior alone, Support is still respected, and as long as support holds, bullish pressure remains alive beneath the surface. Another important factor is market psychology. Many traders are waiting for confirmation. When too many traders wait, liquidity builds. When liquidity builds, institutions move price toward that liquidity. That's why false breakouts happen. That's why sudden spikes occur. The market moves where orders are concentrated. This is why patience is more powerful than speed in gold trading. The best traders don't chase candles. They wait for structure, reaction, and confirmation. Let's also consider macro sentiment. Global economic uncertainty has not disappeared. Inflation concerns still exist. Growth forecasts remain mixed. And geopolitical tensions always create background demand for safe haven assets like gold. Even when gold pauses, underlying demand often remains quietly supportive. From a trading behavior perspective, dips are being bought faster than rallies are being sold. That imbalance matters. It shows willingness to accumulate rather than distribute. Another interesting observation is how gold reacts to news. Recently, we've seen sharp reactions followed by stabilization instead of continuation. Sell-offs that suggests the market absorbs bearish pressure instead of extending it. Absorption is often a bullish sign. Now imagine this scenario. Price continues ranging, volatility tightens further, traders become impatient, and suddenly a breakout occurs during a high liquidity session. That type of move can travel very quickly because there's minimal resistance inside compressed ranges. Traders who prepared benefit. Traders who hesitated chase. This is why timing and awareness matter more than prediction accuracy. For short-term traders, intraday structure remains extremely important. Watch how price behaves near key zones, not just where it reaches. Does it reject strongly? Does it consolidate? Does momentum increase or fade? These micro behaviors reveal institutional intent before large moves happen. For swing traders, the bigger structure is still constructive unless major support is lost. Trend, continuation patterns remain possible, and pullbacks still look controlled rather than aggressive. Risk management is also critical right now because breakout environments can produce sudden volatility spikes. Position sizing and disciplined entries matter more than emotional reactions. Another psychological layer to understand is trader expectation. Many traders expect gold to either skyrocket instantly or crash dramatically. But markets rarely move in straight lines. Most of the time, they build pressure slowly, then release it when attention fades. And that's exactly the environment we are in right now, building pressure. Let me share something important from experience. The most powerful gold moves often begin when the market feels boring. When candles get smaller, ranges get tighter, and traders lose interest. That's when momentum quietly prepares. So if gold feels slow lately, don't ignore it. Watch it more carefully. As we move forward into upcoming sessions, traders should monitor how price reacts around established zones during high-volume trading hours. Reaction speed, rejection strength, and follow-through will provide clues about the next directional push. If buyers show aggressive defense again, confidence in upward continuation increases. If sellers suddenly overwhelm support with strong momentum candles, short-term bias shifts. Until then, the market remains in a decision phase. But pressure is clearly building. And that's what makes today's gold market so interesting. It's not about what already happened. It's about what's preparing to happen next. If you've been following Forex Trading Rocket, Signal, you already know we focus on structure, behavior, and probability, not hype. And right now, probability suggests expansion is approaching. Direction, confirmation pending. So stay alert, stay patient, and stay disciplined. Before we wrap up, I'd really love to hear from you. Where do you think gold is heading next? Are you expecting a breakout upward or a deeper correction first? Drop your view in the comments. I read them all, and your perspective helps build stronger discussions in our trading community. If you found this analysis helpful, share this video with another trader who watches gold daily. And don't forget to like and subscribe to Forex Trading Rocket, Signal for consistent daily market insight, clean analysis, and smarter trading decisions. Thank you for watching. Stay focused, trade smart, and I'll see you in the next market update.